Singapore's central bank expects a slower economic growth in the second half of this year amid uncertainties over tariffs. That is, even as the central bank recorded a better than expected performance in its last financial year with a net profit of $19.7 billion. That is the highest since 2018 and a sharp increase from the $3.8 billion net profit the year before. Now, the latest performance is mainly driven by healthy returns on investments. Assets under management grew 12.2% to exceed $6 trillion for the first time. Last year, the financial sector also grew by 6.8%, and that's more than double the growth the year before. With prevailing global uncertainties, the central bank is not expecting the healthy growth rate of the sector to continue. Now, to remain competitive, MES is pushing for AI adoption in financial institutions through initiatives like the Pathfinder. It helps provide resources for firms to start and scale the use of AI. There are also efforts to enhance the resilience and security of financial services, like preparing for potential cyber risks.
While quantum computing is currently not at a mature stage, the technology is developing rapidly and could eventually render current encryption techniques obsolete, putting at risk sensitive customer data and financial transactions. It is not too early to act now. In anticipation of the future threat posed by quantum-powered decryption, MES has conducted trials to study the viability of quantum-safe solutions for adoption in financial services.
And for more analysis, we're now joined by Swan Teck Hin, Head of Research at UOB. Mr. Swan, a very good evening to you. Thanks for joining us. So a pretty good performance by MES despite global headwinds over the past financial year. Were you surprised at all by these results? And what do you think drove the resilience?
Right. I was pretty pleasantly surprised by the strong performance because it's close to 20 billion Sing dollars compared to 4 billion last year. So basically, the drivers behind why did we do so well, and that's against a background of a strong Sing dollar, because all these assets are in US dollars. So a strong Sing dollar will kind of erode some of these performance, right? Despite the strong Sing dollar, the main driver is, of course, the financial market performance last year was very good, whether it's equity markets, bond markets, or even alternative assets space, right? So these are the combination of factors that provided or they gave the strong $20 billion profit from MAS. But we should not expect to repeat this sort of performance every year.
I was going to ask, how sustainable do you think this outperformance is, especially if global conditions remain volatile or worsen?
Right. So I think the important thing is that we should not expect the same kind of performance. But what we can do, and I'm sure MAS is doing it already, is to have a diversified portfolio against all sorts of market movements or volatilities. So having a diversified portfolio, which I believe that's what MES has in its investments. So that allow us to overcome some of these volatilities, and that produced the strong result that we saw just now. But we shouldn't expect, because you have Trump government coming up, the US President Trump coming up with all sort of policy announcements, and sometimes very surprising and contradictory, that caused the market to react in a very volatile manner. And that's what we are exposed to with the kind of volatilities.
So that remains uncertain, but given MES performance in the last financial year, what would this mean for Singapore's reserve in the near to midterm?
Right. So having a diversified portfolio and also producing good results, that would allow the reserves to grow. Right. That's one of the main purposes of having MES, to manage these reserves. So these strong results will go straight into the reserves, and that provide strong backing for the Sing dollar as well, our Singapore dollar. Right, we have strong reserves, and that provide confidence, and that also leads to confidence on the Singapore economy, Singapore government, and also reflected in the strong currency. That's what we are enjoying right now, a relatively stable and also strong Singapore dollar.
Sure. With assets under management in Singapore now exceeding $6 trillion, what strategies do you expect MAS to adopt to attract and retain investments?
Right. So this is important because Singapore is a regional financial center. So what we saw is that more than $6 trillion asset under management. So that is also the success of MAS having the right policy to encourage and attract more companies to invest in Singapore or through Singapore. Very important, we play our role as a financial center. And the MAS has regulations and also attractive policies to retain and also to attract. And especially in this time of a volatile environment, and many investors see Singapore as a safe haven, so to speak. So they will put in money in Singapore and to avoid or to manage the volatility in the global financial markets. And we are playing the role, and MAS playing its role, and the banking sector playing its role, managing this asset, and also the asset management companies, family offices, and all these investors looking at Singapore as a safe place to park their money and grow their money.
We also know that MAS is set to release its next monetary policy statement by the end of the month. Now, based on today's announcement, do you expect or anticipate any policy stance, policy shift rather, by the central bank?
Today's results from the MAS, probably the way I look at it, has less bearing on the monetary policy statement coming out at the end of the month. I think the factors also mentioned in the annual report is, of course, I think the more important factors is the inflation outlook for Singapore. If the inflation outlook continues to remain stable and also to remain stable, I think that will provide room for the Singapore for MAS to so-called loosen its policy a bit, not as tight as before. Then the other factor also mentioned in today's statement is the outlook for the economy. We should expect some slowdown coming in the second half of the year. So that also provides some room for MAS to adjust its policy, possibly towards the lower to loosen the monetary policy or to loosen the Sing dollar policy a bit. It may not happen in July. It could happen sometime in October or somewhat in the second half of the year.
All right. A lot to look forward to. Mrs. Swan, thank you very much for joining us tonight in the studio. That was Swan Tekin, Head of Research at UOB.